All right, welcome to The Explainer. Today, we're going to tackle something that, well, it pretty much runs our entire economy: accounting standards.
So let's just jump right in with the big question, right? When a company puts out its earnings report, its big, fancy numbers, how on earth do we know they're telling the truth? How can we be sure their picture of the business is the real picture?
To answer that, let's just imagine for a second a world with no rules for financial reporting. I'm talking about a total accounting Wild West, where every single company just makes up its own definitions as it goes along.
And the difference is just night and day. Without standards, one company's profit could mean something completely different from another's. Financial statements would be totally misleading, giving you this funhouse mirror version of the business. In that world, trying to make a smart investment would be, well, pretty much impossible.
So obviously, that kind of chaos just couldn't last. The world desperately needed a solution, a sort of universal translator for business that everyone could agree to use. And this quote really hits the nail on the head. You've got to think of accounting as a language. And just like any language, if we're all going to understand each other, we need a shared grammar, a common vocabulary, so that investors, regulators, and you and me can all know what's actually being said.
And that's exactly where accounting standards come into play. They are the official rulebook for this language of business, the formal, written-down policies that spell out precisely how financial information needs to be handled.
These standards basically answer four huge questions. First, recognition. When do you actually record a sale? The second it happens, or when the cash is in hand? Next, measurement. How much is that shiny new building really worth on the books? Then you've got presentation, which covers how it's all laid out in the final report. And finally, disclosure. What other crucial details do you need to share? The whole idea is to make sure everyone answers these questions the same way.
So, who are the masterminds behind this incredibly important rulebook? Who actually gets to write these rules that shape our economy? It's not as simple as you might think.
Well, in places like India, for example, the whole process is led by the Accounting Standards Board, or ASB. And this isn't some tiny group of accountants in a back room. No way. It's an independent body made up of people from industry, government regulators, academics, and other experts, all brought to the table to make sure the process is thorough and fair.
And the process itself is really careful and collaborative. First, they find an area that's causing confusion. Then, a study group puts together a first draft. But they don't stop there. That draft gets sent out to key groups for feedback. After that, they release what's called an exposure draft for public comment, so literally anyone can weigh in. Only after all that feedback is taken into account is the final standard issued. It's all about building consensus.
Okay, so we have this rigorous process. Now, what's the payoff? Having these rules in place creates some really powerful benefits for everyone involved in the economy.
This is what creates a level playing field. Standards get rid of all those confusing variations we talked about, which means you can actually compare the financial statements of two different companies and know you're looking at apples and apples. And get this, sometimes they even require companies to disclose information that isn't even required by law, all in the name of greater transparency.
But you gotta ask, right? Is this system perfect? Does it have any weaknesses or blind spots?
And yep, they do have limitations. For one, sometimes there are multiple, perfectly logical ways to account for something, so choosing just one standard can be a really difficult compromise. And maybe more importantly, these standards can't just override a country's laws. They have to be framed within the ambit of prevailing statutes.
So let's bring all this home. Let's see why this seemingly technical topic actually matters to every single one of us.
At the end of the day, it all boils down to one word: trust. Accounting standards are the absolute bedrock of trust in our entire financial system.
And this trust is essential for everybody. It's what allows investors to make informed decisions, what helps banks grant loans that let businesses grow, and what helps governments ensure fair taxation. That stability, that reliability, it ultimately benefits all of us, creating a healthier, more predictable economy. So this framework gives us transparency and a common language for business, which is an incredible achievement. But it does leave us with one final crucial question to think about. Having a rule book is one thing, but is everyone actually playing by the rules?